Hi everybody, it's John Seville at Acorn Wealth here again, and welcome to Acorn's Trade of the Week review. Just a quick disclaimer, as you've probably seen on all sites, just have a quick read through it there. But basically here we're going to go through our review of the trade this week. And the review of the trade this week is going to be on McDonald's. And it's a trade we did recently where we're actually able to pick up a 28.57% profit in just 2 hours and 36 minutes using a very specific strategy or pattern. And you can see I've actually hinted towards what that is below for all those pattern junkies out there. You probably might be one step ahead already. But before we go into that, I want to ask you a question. What is your strategy? And what I mean by that is if I gave you a pen and paper, what would you draw exactly? What would the perfect chart look like if you were going to buy? What would the perfect chart look like if you were going to go short? And exactly what indicators would you use to confirm it, and what would they look like? And you need to know that if you're going to trade professionally or even for additional income or capital growth, whatever your goal is, because different stocks have different personalities. And it's important, it's crucial to understand his personalities because depending on the personality, you're looking for something completely different. Just like a doctor who specializes in a specific type of medicine, you need to understand the specific types of symptoms to the type of stocks you're trading. And that's because every chart tells a different story. For example, if you see a chart going up that has equal highs, but the lows are getting higher, that's a bullish pattern called an ascending triangle where it's about to generally break out and go up. But a lot of people confuse this with a stock where the highs and lows are getting higher, but it's converging in almost like a pizza shape. And when you see this, this actually is not bullish, but in fact, most likely this is about to drop. So it's bearish. And the difference in understanding those different personalities is a crucial one because it basically essentially tells you whether you're going to make money or lose money if you were going long on both those different charts. So what's the trade of this week? Why did we pick McDonald's? Well, firstly, it was because of the market. If you look here on the chart, you actually see a photo of the S&P 500 on June 18th as it closed. It was a Tuesday, and essentially we looked at how the S&P was shaping up, and we drew a line through all the bottoms over a 6-month period, and looked at the tops over the last couple of weeks at this stage, and saw that the S&P was right at the top of a channel, and that's a particular charting pattern where the stock just bounces, or the index bounces back and forth with no real direction but simply moving and shaking between two lines. Now that channel we found that the S&P was right at the top of it, right at 1660 here. Now the Fed was announcing the next day, and as many of you will know, generally most news is already baked into the market. So there's no real advantage of guessing what the news is because, in our opinion, if the news was good, well, the market had already factored it into the price of the market. So if it was good, the market or the S&P was probably likely to only just go up a little bit more into this ceiling and come crashing back down. But if the market was bad, well, probably the same thing. It was already at resistance, so it was likely just to hit that and go back down. So the significant advantage going, or to get an edge on the market, we felt was to be looking for shorts, looking for stocks that we can make money on if they go down by shorting, or in this case, in this week's trade review, buying put options, a leveraged way to trade. So, in fact, I'll show you something interesting because I was actually on vacation with my mother who was visiting from Australia at the time when we analysed this, and this is a great, one of the great images I like sharing around the office of why I like to trade. This was actually the day that I was analysing the market, and you can see, I'll just zoom in, this is actually at Lake Louise, Alberta, and right before all these terrible weather came in. But if I zoom in, you can actually see that was the S&P right there on my laptop. I didn't know she was taking this photo. She was taking a photo to criticize me for being just like my dad and always needing to work. But here it is. And you can see there was the S&P trend line, and it was just bouncing down, up, down, up, and there was that trend line. And I like sharing this photo with people because it really shows the main drive behind why I like to trade, having that freedom away from the office, being able to make money from anywhere. But anyway, I'll go back to the chart of the S&P, and again you can see that pattern. So we felt, yes, shorts. So we did a scan for patterns that were favorable of shorts, and I ran it from that very same laptop. It took me about 1 minute. I went through every single stock in the US exchange and found a short list, about 10 stocks that were looking ideal to drop, and narrowed that short list down to the two favorite ones that I had, and one of those was a pennant formation. That was what those images added up to. The pen and the ant. Get it? Right? So anyway, moving on. What a pennant is it's essentially where a stock bounces back and forth between two fixed lines, usually pointing horizontally to the side. And this is a form of consolidation or directionless. And what you wait for is you wait for a break in one direction. So if the market's looking bearish, what you do is you wait for that direction to go down. Now, a lot of your off the street stock market for dummy books and things like that call this a breakout trade, and it is. But what a lot of amateur traders do, and where they get caught, is they start going short or betting against the stock essentially after it's already broken out. So they'll start betting against it here, much to their disappointment, because what will happen usually is it'll actually go back up the other way, called a retracement. And then all of a sudden you're down 3-4%, and you're thinking, oh God, what do I do? Do I stay in? Do I get out? Which is why what we teach people to do is to wait for that retracement. Wait for it to go down. Don't chase it. Let it go back up and retest that resistance from beneath. And this is what I was looking for from McDonald's, to take that entry and profit on the next drop. So here's what McDonald's looked like when I shorted it, when I bet against it. And this is and making money in a downward market is so important, especially given the way the market's been acting recently. If you don't know how to make money when the market drops, you are missing out on half of the market. And markets drop much quicker usually than they go up, so you're missing out on a lot more of the opportunity. Okay, I've had students that have doubled their money in a year in an up market, only going against stocks. So again, it's really important to educate yourself and understand how things can move. This is how we played this stock. When we saw McDonald's, it was bouncing back and forth between these two lines, pointing to the side, and it broke out. It broke down. And what I was waiting for was for it to retest. And I did it here. I almost took that trade that first time, but I was in other positions, and I was waiting, hoping I would get another chance at it. And that's exactly what the market gave me, as it rallied right back into that line, hit that ceiling from beneath, and that's where I took my position. And I bought on the morning of June 20th, 6:44 a.m. Pacific time, over here on the West Coast. And we bought, I bought options at, put options at $2.45. And what I was expecting to happen was that the stock McDonald's would drop from this $100 zone down towards 96. So basically about 2.5 hours later, it had. And I got out, sold my options, took a 28.57% profit on that. Just a small position, but a healthy one. And this is why, trading can be so exciting, because even with a small portfolio, let's say you had $1,000 in that, that's a $280 profit in a little over 2.5 hours. And that's the whole point of trading, is the afternoon before, You plan exactly what you want to do the next day based on a very well formulated strategy and plan. You wake up the next morning, you take the trade, you're in, you're out, and you know what you can do with the rest of the day? And that's a picture actually from that same trip. You're out of the market, and we enjoyed a lovely hike. Went up, I think it was Lake Pato. Anyway, but you're out of the market. You don't have to worry about anything. Your job is done, and now you can enjoy your time. Instead of what most people do, that I talk to, a lot of students, which is sitting at the computer trading all day long, pulling their hair out, generally over trading, but more importantly, wasting their time and wasting opportunities because they don't have precise strategies. They're chasing. And that's what we're here to teach you about. We're here to share with you our scan. Here to show you why your time is valuable, and that if you develop the proper scan, you can save yourself tons of time and limit your market exposure to just a couple hours, maybe at the most a day, or in the case if you're swing trading, 20 minutes a day. So don't take my word for it. Come and give it a try. We're opening up our premium service to give everybody a chance to experience this firsthand over a week period, over 7 days. There's no credit card required. Just fill out the form by following the link below the video, and you'll get 7 days of newsletters where we'll actually tell you exactly what we're considering buying ourselves, just like this trade. I sent that out the day before I got into it. We'll tell you where we're thinking of getting in, what we're looking to get out. We're not here to advise you. That's up to you to decide, kind of what you do with your own money. But we'll tell you what our strategy is doing and what we're doing, and so you can kind of look in and see how we trade. We'll also have 2 live sessions every week on Tuesdays and Thursdays where we'll analyze the market, talk about these positions, and really break them down, and many other stocks, over a 1-hour session, which is basically just an extended version of this. And most importantly, as I always joke, we'll also give you 7 days of regret, wondering why you've been wasting so much time not doing this before. And I hope to see you in the room. But for now, this is John Seville from Acorn, out, and happy trading.